Assalamualaikum warahmatullahi wabarakatuh. Hello guys, my name is Khairunnisa and I'm from accounting. Today we will discuss material about cash flow statement, understanding the cash flow statement. The topic that we will be discussed today is how the cash flow statement is used, structure of the cash flow statement, how cash flow is calculated, limitation of the cash flow statement, and last is an example of the cash flow statement. First, how the cash flow statement is used. The cash flow statement paints a picture as to how a company's operations are running, where its money comes from, and how the money is being spent, also known as the statement of cash flow. The CFS helps its creditor determine how much cash is available or referred to as liquidity for the company to fund its operating expense and pay down its debts. The CMS is equally as important to investors because it tells them whether a company is in solid financial ground. As such, they can use the statement to make better, more informed decisions about their investment. Next chapter of the cash flow statement. The main component of the cash flow statement are cash from operating activities. The operating activities on the CFS includes any sources and use of cash from business activities. In other words, it reflects how much cash is generated from a company's product and service. These operating activities may include receipt from sales of goods and services, interest payment, income tax payment, payment made to suppliers of goods and services used in production, salary and wage payment to employees, rent payment, and any other type of operating expense. In the case of trading portfolio or an investment company, receipt from sale of loans, debt, or equity instrument are also included because it is a business activity. Second, we have cash from investing activity. Investing activities include any sources and use of cash from a company's investment, purchase or sale of assets, loan made to vendor or received from customer, or any payment related to merger or acquisition or M&A are included in this category. In short, change in equipment, asset, or investment relate to cash from investing. Change in cash from investing are usually considered cash out item because cash is usually to buy new equipment, building, or short-term asset, such as marketable securities. But when a company defaces an asset, the transaction is considered cash in for calculating cash from investing. Last, we have cash from financing activities. Cash from financing activities includes the source of cash from investors and banks, as well as the way cash is paid to shareholders. This includes any dividends payment for stock repurchase and repayment of debt principal or loans that are made by the company. Change in cash from financing are cash in when capital is raised and cash out when the dividends are paid. Thus, if a company issues are bond to the public, the company receives cash financing. However, when the interest is paid to bondholders, the company is reducing its cash. And remember, although interest is cash out expense, it is reported as an operating activity, not as a financing activity. Next, how cash flow is calculated. There are two methods of calculating cash flow, the direct method and the indirect method. First, the direct cash flow method. The direct method adds up all the cash payment and receipt, including cash paid to supplier, cash received from customer, and cash paid out in salaries. This method of CFS is easier for very small business that use the cash basis accounting method. These figure, these figures can also be calculated by using the beginning and ending balance of a variety of asset and liability accounts and examining the net decrease or increase in the accounts. It is presented in a straightforward manner. Most companies use the accrual basis accounting method. In this case, revenue is recognized when it is earned rather than when it's received. This caused a disconnect between net income and accrual cash flow because not all transactions in net income on the income statement involve actual cash item. Therefore, certain item must be reevaluated when calculating cash flow from operation. Next is indirect cash flow method. With the indirect method, cash flow is calculated by adjusting net income by adding or subtracting a difference resulting from non-cash transaction. Non-cash items show up in the change to a company's asset and liabilities on balance sheet from one period to the next. Therefore, the accountant will identify any increase and decrease to asset and liability accounts that need to be added back to or removed from the net income figure in order to identify an accurate cash inflow and outflow. Next, limitation of the cash flow statement. Negative cash flow should not automatically raise a red flag without any further analysis. Good cash flow is sometimes the result of a company's decision to expand its business at a certain point in time, which will be a good thing for the future. Analyzing change in cash flow from one period to the next gives the investor a better idea of how company is performing and whether the company may be on the brink of bankruptcy or success. DCFS should also be considered in unison with the other two financial statements. The indirect cash flow method allows for a reconciliation between two other financial statements, the income statement and the balance sheet. Let's have an example of cash flow statement. From this CMS, we can see that the net cash flow for the 2017 fiscal year was $1,522,000. The bulk of the positive cash flow stems from cash earned from operation, which is good sign for investor because it means that core operation are generating business and that there is enough to buy new inventory. The purchasing of new equipment show that the company has the cash to invest in itself. Finally, the amount of cash available to the company should ease the investor mind regarding in notes payable, as cash is plentiful to cover that future loan expense. So that is from me. Thank you guys for your next lesson. Wassalamualaikum warahmatullahi wabarakatuh.